everyone. Now in this session we're going to get to grips with the global opportunities and threats that a growing, more powerful Chinese economy will present for the world in the future. Okay, it's very important when you look at this sort of area that you make sure that you break down different types of economy. So for instance, you focus on a particular MEDC and the impacts China could have there. An LEDC, a transitional economy. Focus on those sort of three categories and focus your research into those distinct categories when it comes to picking countries out to really understand China's influence here. Okay, let's take a look at some of the opportunities firstly that I've put down here. So firstly, we could see that there could be, as China's comparative advantage in manufacturing begins to erode, that there's increased reshoring of manufacturing to MEDCs. So it could be that MEDCs actually have an increase in jobs in this particular sector because China isn't quite as competitive as they once were. And of course, this is why China wants to upskill their labour force and move into higher value added manufacturing processes. Okay, something else to bear in mind is also the responsiveness to market that this would offer as well. So when it comes to reshoring, another key reason here is that it means that you can respond to your consumer needs very, very quickly because you are based near the home market. Okay, so One Bridge, One Road program to support infrastructure development. Well, this is a huge one. It's absolutely enormous, this project, of course, $1 trillion investment. Now it's really got the opportunity to increase trade along all of the areas that are involved in this program. Yeah, it really is absolutely enormous, this, in terms of the scale that's being undertaken and the trading opportunities that it presents. Further to that, of course, it offers the opportunity to really develop the infrastructure of so many really quite poor countries that should benefit quite extensively from this. But at the same time, it's also seen as an example of neo-colonialism and China's attempt to actually build an empire. So there's two sides to this coin. Certainly China will become wealthier as a result of this project, but many other countries will also benefit as well. Okay, all right, so China is one of the world's most lucrative consumer markets as well. So a McKinsey report I read recently was saying that there's now 116 million households in China with an annual disposable income greater than $21,000 a year. So this is a huge market to target. It's going to continue growing, of course, that number. And this means that there's going to be increased demand for normal and luxury goods with strong income elasticities of demand. Okay, so this presents a real opportunity for MEDCs to increase their exports to China, to increase sales of luxury cars and luxury fashion goods, but also food products as well. The opportunity to actually increase sales of Western branded and largely trusted products to the Chinese is also a big one. Okay. Then we've got whether other LEDCs can actually fill the vacuum created by the restructuring of China's manufacturing. So to what extent can other countries jump in and really take advantage of the fact that China isn't so competitive at that lower end of the manufacturing sector now? Does this present a real opportunity for the likes of Bangladesh, Vietnam, Sri Lanka, India? Okay, so this is another really interesting concept to explore. When you think about China, of course, you've got an enormous population, 1.38 billion people. So can anyone truly fill that vacuum? Well, the closest, of course, when it comes to population size would be India. But do they have the actual capacity and infrastructure needs that are necessary to actually ensure that they can fill that vacuum? It's highly, highly debatable. Okay, next point is just about Chinese tourism. Chinese tourists, when they go overseas, they're one of the highest spending tourists that there are on average. Further to this, when it comes to the cruise market for Chinese tourists is doubling in size every year. So there's real opportunities for MEDCs and MEDCs cruise-based firms to actually really cash in on that, as well as other holiday providers. Okay, but of course, Chinese companies are likely to want to cater towards their own consumers as well. Right, let's take a look at some of the threats then. So firstly, I've put down the loss of foreign direct investment to countries with hard commodities. So take, for instance, Brazil and Australia. Those countries continue to grow through the global financial crisis 2008. And one of the key reasons for that was China's insatiable appetite for hard commodities. Now, it's very, very interesting looking at the experiences of those two different types of economies since. So Australia and MEDC has continued to grow since then and has continually avoided a threat of recession. But Brazil has had a really hard time of it as China's demand for these commodities has cooled in recent years. And one of the key reasons for that, of course, was that Brazil's currency appreciated because of the demand for these commodities, and that meant that their other export sectors were far, far less competitive. Really was a classic example of Dutch disease, and they in 2016 an awful recession and have been having a very, very tough time since. So those are interesting examples to take a look at. Okay, next point, greater competition from Chinese companies. So yes, Chinese companies are growing, they're getting bigger, they're becoming more innovative. I think in 2010 on the Fortune 500 list, there were 43 Chinese-based companies on that list. By 2015, that number had reached 103. So China, therefore, having over 20% of the world's largest companies as listed on the Fortune 500. And that means that there's going to be intense competition in MEDC's home markets as well as in China. So the intensity of the rivalry is really going to pick up. What's also interesting there is considering the merger and acquisition activities of these Chinese firms as well. China 10 years ago, say, was very much focused on taking over mining, mineral-based firms and so on. Now, of course, they're more focused on advanced technologies and innovation and yeah, just making sure that they can improve the actual supply capacity of their own economy, their own productive capacity. Okay, so yeah, some interesting examples there. Right, next up, contagion through trade and foreign debt. So, of course, being highly integrated in the global economy does pose certain risks. And if there is global downturn, of course, China will experience falling demand for their exports. And of course, that can pose a threat to growth, which can have repercussions across the global economy as well. Further to this, you've also got the fact that if China was to slow down or even have its own recession, then that would pose massive problems for the global economy as a whole when you consider that China's economic growth contributes a third to global GDP growth at the moment. Further to this, China is the world's largest holder of US Treasury bills. Now, that gives them a huge amount of influence over the US. Okay, certainly Niall Ferguson has suggested that if China chose to actually sell all of their foreign debt, their US Treasury bills rather, that if they did that, then it could even prompt a war. Okay, so that while that might seem far-fetched, it would create all sorts of financial problems. Okay, he terms it Chimerica, so by all means take a look at that. Okay, so a strategic and economic threat to the US is our last point here. So a strategic threat in that China is developing better relationships, is developing relationships, not always better, but sometimes better than the US. That their outlook seems to be more about supporting some countries than the US's approach. Take, for instance, Pakistan, where $18 billion is being invested by China to help bring stability, according to this One Bridge, One Road project. Contrast that with the Americans' approach with the war on terror. It's very, very different. And then you've got the whole sort of battle between ideologies of the Washington consensus versus the Chinese approach that we've taken a look at. So, yeah, some US economists certainly advocate that America should be busily reaching out to the likes of Japan, the likes of India, to develop their presence and develop a degree of positivity about the American economy and what America can do for the world in response to the One Bridge, One Road project. Okay, and then of course there's all sorts of talks about the role of protectionism and the fact that the US economy runs a persistent current account deficit with China. But at the same time, the US has run a persistent current account deficit for the last 40 years. So is that necessarily China's fault? Okay, so overall, let's just wrap this up. Now, there's a TED talk from about 2010, I think, by Martin Jacks, an author and commentator on the Chinese economy, and he just believes that, well, what will happen in time is that more of the world's population will have responsibility for governing the way in which the global economy is run. He believes that's got to be a good thing, and that we face a choice, really, that we can either choose to cooperate or we can choose to compete. So, yeah, he obviously suggests that cooperating would be the better outcome. But nevertheless, he remarks that the world is becoming less and less westernized. And we're just going to have to make deal with that, because China will become the largest economy in the world, and it's going to be the first time that an LEDC will actually take that position, the first time in history. So that's going to be very, very interesting for all of us. Okay, that's it. Thanks, guys.